Good morning. Welcome to the Brew. It is Thursday. That means Traders Workshop. Today, the lads will talk about expiration impact. Do option expirations drive market moves? Let's get into it right away. I wish it were louder.
We need more drums, I think.
Yeah, I was drums. I wish I like loud music. I don't know. I don't know. I'm an 80s guy. You know, you guys weren't even born in the 80s or something like that.
I was born in 80.
You were?
Yeah, I was born in 80.
You know what I was doing? I'm not going to tell you what I was doing in 80. It's not okay for prime time.
And is that any different than 2024?
Probably not. Good point. How are you, gents? Good to see you.
All right, Lex, how you doing?
I'm good. Mark and I are coming off a whirlwind dinner in Chicago last week, right?
I missed the show last Thursday.
Dude, it's a week already that we had dinner.
Yeah. Well, it's been 2 weeks since I've been on the show, and I feel like the market's like nothing happened.
Yeah, right? We had a 1,000-point down day, and before you know it, we're back beyond, right?
Yeah.
All right.
Nothing happened.
Nothing happened, right? I know.
No, bar hopping should be a Olympic sport.
Well, Mark and I would be freaking gold medalists.
Yeah. Well,
Trade my whole life for this.
That's right.
all
right,
you guys representing America, Lex and Mark.
Yes, exactly. All right, Jason, this could be your topic du jour. Although we all have opinions. So it's the expiration effect, if there is any at all. So what are you thinking about this one? I know we've got this Vana charm thing that happens and yada yada yada. So
So first, I know even though zero DTE exists, there are more expirations. There's more offerings than ever. That monthly expiration, that 1 a.m. expiration. By one, I mean single, not 1 a.m. But anyway,
1 a.m. like in the morning.
Yeah, no, but that single a.m. expiration on the third Friday, or I guess it's after the third Thursday of every month, still gets the most traffic out of any monthly option, even zero DTE.
Right. Hold on. What do we call that expiration, Mark? I called it the serial expiration.
With an S.
With an S, not a C. Why so serial? So that's what we used to call it. And don't forget, I mean, maybe not for Mark, but when I started, there was only one of those babies. It was the only one that existed, including SPX. So
I think maybe year 2007. Does that sound right?
Yeah, probably around then. So we only had to deal with this effect once a month, and all trading was well and good before that. So there was nothing. I mean, I started in the late 80s. And that was it. And talk about strike selection, that we were 5 points wide in all things, right? Even the little baby ones. So I mean, there's we've gotten more granular, let's just put it that way. So with SPX being zero DTE, meaning every expiration for I think it's a month out, you have every day there's an expiration. Is there an effect? But you're saying that on the serial, the third Friday of the month is where we tend to see the most interest. Yeah,
we see a lot of volume still on that date. I think whether it's mandates or just habits. I don't know, but you get a lot more volume even on like single names, even though they don't have the AM expiration. Single names still get that third Friday volume. So it does have an effect. However, a lot of people look for that effect on the day of option expiration. And typically, unless you're, just chilling around like a strike that is really large, really one-sided, and, people look for a pin at that strike, unless you are right on top of that strike, the real impact, the Vanna impact, the real stuff happens really like a week before, or maybe, like in the beginning, like Monday, Tuesday before. The only exception is when there's, some kind of catalyst like CPI or,
Right.
retail sales, I guess. If there's a catalyst, then they kind of inflate that implied volatility a little bit more. And then option expiration has a lot more effect. Like on CPI is a really good example because there was a lot of event vol. Option expiration is only like two, I guess if you count in the morning, 2 days away, 3 days away.
Sure.
And so the implied volatility was a little bit higher, and then it squeezed it now, now it's all gamma.
It's all gamma now. So I'm still just trying to get my head around market effect. What I mean by that is macro market effect. So SPX like or QQQ like versus individual name. To me, there could be a more profound effect in any individual name versus an SPX. SPX is $1 trillion market, right? If you're going to tell me that in $1 trillion market that dealers have $1 billion, whatever multiple you put in front of it, of gamma, I'm going to say, okay, that's minuscule.
So the notional traded on SPX is like 500 billion every day on options. Like, so it's not, it absolutely has an effect. It's not like 1 billion to 1 trillion.
Yeah.
In individual names, there is an effect too. But again, it's mostly in the beginning of the week, not the end of the week. By the time people start tweeting and saying, "Oh, OPEX tomorrow, get ready," the effect's already over
because everything's hedged. You're saying,
yeah. Well, not just hedged, but many of those options that were traded for OPEX are out of the money or deep in the money. They're either 100 or 0 delta.
I got you.
So, so it's only like a small kind of, I guess you could say, like sphere of influence around current price that actually has an effect on OPEX. And that's true too with 0 DTE. The problem is on 0 DTE, they trade on that same day. So that sphere of influence is the only place that any options are traded.
Right.
But even as that happens, the sphere like kind of shrinks very, very quickly to like 2-3 strikes above price at around 3 o'clock. So by the time you see the effects, or by the time you think about the effects, because OPEX, tonight, the effects are already done. Like we're seeing the last of it today.
Gotcha. Mark, any thoughts on this one from our past or from our current situation?
Well, to Jason's point about how a lot of it ends up out of the money, I think it's also interesting when you look at, and this goes to the serial expiration point versus the 0 DTEs or versus the weeklies. Like, to the extent that a listing has been around for months, if not years, if you're talking January, a lot of that open interest doesn't matter, even in the week before, right? Like if something's been on the run since January of last year and stocks had a decent, path, then you're going to see strike listings and open interest that like doesn't matter at all. In like when I was doing a naive strike score of comparing different expirations and how granular their listings were, some of the best granularity actually occurs after the market's had a run up and run down. So right now we're less granular because we're at the top of our range. Whereas after the market had a run up in 22 and then, run up in 21 and then down 22, like you see a huge range of strikes listed.
Right.
Not all that open interest matters though. And like how far away you like it's what's at the money that matters. And so that can be important on a serial expiration. It could be on a weekly that someone has a big trade too.
Sure. But you could, and I agree with that, by the way. I think what's at the money is the crucial point. That's it. Right. And to Jason's point, deep in the money stuff, it doesn't matter anymore. So it's that at the money. And I like to look at the dealer gamma of the at the money options, right? Because they're going to make decisions, right? And if they're holding the bag of all this stuff, they have the most profound influence, I would say. So I think there's some value in checking that out. If we're at a strike, pick your stock XYZ, and we're trading at 100. It's probably pretty nice to know what dealers are holding at the 100 strike. I want to know that.
Yeah, especially, I mean, you will have gamma effect if there's like, some kind of catalyst on, Thursday, like a day like today, you will see a gamma effect. I think that there's a lot of that that we're seeing today. running up to about 5,500 to 5,550. But now that gamma affects if you see which side the dealers have, which, check out Volin. That's where you see
Give
which
a
side
plug.
the dealer
Hold on. Give a plug. Let's hear it.
Ding.
Vol.land.
Vol.land. That's where we granularly look at every single option trade, assign it to dealer or customer, no assumptions, nothing like that. So it is the most accurate dealer positioning you can get in the market. So that being said, there is a lot of positive gamma at 5,500 and 5,550. So I mean, but it's going to push against, it's going to push against the this market momentum. So I don't think we're going to get much higher than that today. We may spike, but then come back down.
Yeah.
But all that like Vanna effect and stuff happens like a week prior. Like all that's kind of Monday, Tuesday news. In this case, it was probably more Wednesday news because it was a catalyst. So yeah, I mean, but most of the time, by the time people are thinking about it, saying, oh, it's OPEX. I do think that sometimes if you have a lot of deep in the money, like calls or something, and dealers have to, dealers would be typically long calls. So they would be hedged. They'd be hedged short. So they would have like a lot of minus. You might see like a burst up after OPEX because they have to get rid of all those short hedges. But a lot of times they're hedged for that. They're anticipating that. So it's not as big of a deal as people make it out to be on OPEX. But there is an effect. It's just earlier. Okay.
And I think it's contextual too, right? Like what else is going on in the market could easily swamp like a scenario. So sometimes it's everything, and sometimes like that's not the main show today.
Yeah, right. I think like when there are catalysts during OPEX week, I think that they have like a bigger influence than when there aren't any catalysts. Like when they have FOMC day on OPEX week, that's like because there's so much gamma around that that have all that IV.
Is that your Super Bowl? Is that your one trading day of the year?
Oh my God! So
no, that's actually what would I say? I would say it's like breaking. It's I'll watch somebody else do it.
Right.
How often does that happen? Does it?
It's been happening like because it happens every 45 days. So I think that next month we might have one that's close. Yeah, I think like next month. This month it's Jackson Hole next week, so it's a little too late. But I think next month is September 15th. I think it's OPEX week.
Right. Okay, I have a question.
Yeah.
Important question. Ready? We have this great information. What can we tell the retail person about strategy relative to OPEX? Is there any sort of kernel of wisdom that can be passed along? Do you avoid it? Do you trade it? Do you?
Oh, so are you talking about? All right. So if I have, with Volland, I'm able to see dealer positioning. The first thing I do on OPEX week is I look to see how many in the money calls or, what kind of situation that we're looking at. But because if you have a lot of in the money things, then gamma starts to take an effect. But then it's a good time to look at next month and see what is the hedging strategies of customers and for the next month.
Wait, when you say next month, do you mean the next serial or the next expiration?
The next serial.
Okay.
The next serial.
Gotcha. Go ahead.
So the September, what is it, like 18th or something like that?
Yeah, thereabouts. Yep.
Yeah. So I look at that serial. I try to watch what customers are hedging now. Like, are they hedging deep puts? Are they not hedging puts? In June and July, all they were doing was selling calls. Since the Friday VIX explosion, I guess, there were some puts that were bought. It lowered dealer Vega positioning, so it was good for dealers. Dealers were very happy with that day. But so there are some There are some puts bought. There's a little bit of support, but it's all the way down at like 5,000. So there is some room below. And there's still a lot of calls starting at 5,500 up to like 5,700, 5,800. That's like the sweet spot of calls that are sold. I think that mostly liquidity is kind of slowly coming back. But this is the week that I look at next month. Think about what strategy I should do next month.
Okay. Any thoughts from you, Mark, on the trade setup?
At the end of the day, I don't love the idea of waiting till exactly 4 o'clock to like hang on to something and having like a strategy that's like very dependent on like pins at expiration. I think that can be a strategy. Personally, I don't like it. But so I tend to say, if you want to trade that way, like that's a very precise, involved, I got other places to be at 4 o'clock. Yep. Like I want a strategy that I don't necessarily need to be waiting till expiration. I like to roll in advance. Like I like to get that last coin flip out of the way. Like I'm, focused on a bigger pile of change than the randomness of that day and that pin. So close my pin risk days in advance.
Yeah. I was pretty much the same way. I don't like to have the pin risk at all. And it was funny back in the trading days, you could see some of the market maker positions, right? They would be right around the strikes. It was a massive box, long call, short puts, long puts underneath, short the call, corresponding call. It was this massive cluster of boxes by the time expiration rolled around. Now, having said that, you do have risk. You do have pin risk, right? Because if I have a long call and a short put and I'm converted off or reversed off in that example, right? I have exposure on my short option if it pins right at the strike. You can have an exercise that I'm not going to know about. So, there's tactics to get out of that. You can do boxes to roll it out of there with people. But that's a true risk.
Well, you can see that pricing today. Like you can look at SPY, like the most liquid thing in the world, and the Americanness of those options is on display every single day in 0DTEs. Like that combo still has pennies of value because of that expiration window.
That's right.
That pin risk has a real cost because the most liquid instrument in the world can still move, and maybe not in the world, that's not financial advice or whatever, but can still move between now and expiration.
Right. So here's the layup to the question. Okay. Someone asked me this yesterday. The person said, is there after expiry risk, long or short options in an SPX product if the market moves after the 3 o'clock Central Time close or 4 o'clock Eastern Time close? What's your answer?
Oh, are you saying because options expire at exactly 4 o'clock?
Well, they get marked at 4 o'clock to the cash price.
Right. So they get marked at that time. So if the market, if ES moves, 5-10 points after
20 handles. Yeah.
Doesn't matter.
It doesn't matter.
You can change your settlement instructions until 5:30 Eastern.
Correct. Well, here's why it doesn't matter. Because of the cash nature of SPX, you can't buy or sell an underlying security to hedge. So when it settles, the OCC has to have a settlement price, okay? Because it expires in cash, not in a transferable asset. It's over. Doesn't matter if a bomb goes off and a nuke bomb goes off and the market's down 3,000 points. Doesn't matter in SPX for that expiration. However,
but you just trade SPY against it, or
that's right. You don't have to trade against it at all. It's done.
There's still an economically viable trade.
So that's going to that point with a deliverable like SPY, where you get actual stock, or AMAT or Apple, anything like that. When you're short or long and something happens after the close, did I get a thumbs up?
No. I just saw you pull AMAT and
I'm looking at AMAT.
You didn't even know what that stock was until right.
I'm doing the AMAT trade later today because we have earnings. That's why
market maker fashion. Who cares what it is?
You didn't even know that stock existed until
I did, not until today. But there's a profound effect after the expiration close, and you have a window to make your decision. So if I have an option that's out of the money, okay, and there's news in the stock, and I'm long that out of the money option, and the stock blows through that strike to the upside that I'm long, okay, technically I should be exercising that out of the money call. And it's going to look bad on paper, but I can hedge my my exercise by selling that stock against that exercise and be netted out to zero. Correct? And in the pro days, we had that happen all the time. And sometimes good, sometimes bad. Why is that the case? Because if I'm short, I don't control it. If I'm long, I control it. So when I'm short options that are out of the money, I'm like, ooh, whoopee-doo, great, I made it. They expired worthless. Not necessarily. And I can tell you a Priceline story. It went $25 through my short strike. Guess what? I got assigned on almost all of my shorts. Some people forgot to exercise, and that was painful, right? So when equities expire, it's not the end of the story necessarily. Now, for a period of time, what's the window, Mark? Do you know? It's an hour or something. I forget now.
I believe it's 5:30 Eastern. I mean, it's obviously going to depend on, for a retail trader, it's going to depend on your broker, but all pros, it's 5:30. And there have been a number of cases about incidences where people try to exercise them after, because when settlement used to take place on Saturday, you had an even bigger window that you could fudge stuff through.
That's right. That's right.
But I believe it's like a $750,000 penalty per line or something. It's a ridiculous fee if you get caught exercising after the close or after the 5:30. Yeah,
and I know we know of cases where that was the case. That was the incident where people did it, and they try to outlaw that. And 750 is a big number, right? So
it's got to be way through the strike to make that.
Well, think about it though. If you're like a big Citadel Susquehanna, and you stand to make millions and millions, you're just like, I'll take the 750. Let's go. Sign me up, right?
Except for then you've got that illegal activity on your Form BD, and it's not just the money.
That's I've got a few dings on my driving record. Not exactly the same, is it? But no, it's really important to know that. So the cash settle part of it is, they market, you got to get cash one way or the other, long, short, they settle it, you're done. End of story. That's why I like trading SPX so much. And this isn't necessarily an advertisement for SPX. I just like it because my risk is really defined. You can't get assigned early, European exercise. It's an easy peasy kind of game. In terms
of butterflies all day and don't have to worry about closing it.
No, you don't.
Yeah. XSP also.
XSP is another great one.
Plus you get the tax benefits.
Well, that's a 60-40 deal.
Mm-hmm.
We'll do another deal on that because we got to go. So anyway, good stuff. I actually hate trading on expiration day. I mean, especially toward the 3 o'clock bell or 4 o'clock bell Eastern time.
The only good thing about Expo is we got free food.
Yeah, we always had lunches catered. Yeah, catered on Friday of expirations, the cereal. So
now it's every day.
Yeah, well now it's every day. So we always get lunches every day, right? Such a good deal.
No, not that expiration.
All right, good. Good to see you, gents. What are we at? Thursday. Have a good weekend. Sort of. Thursday always starts a weekend for me. I don't know about you guys, but no. Nothing.
No.
You guys with young kids, you got to go chase them on a soccer field or something.
Well, there's that. But, I got newsletters, and I got I do all kinds of things Fridays.
Yeah.
Plus, I've got a lot going on.
I'm glad to hear it. That's excellent. All right, boys. I can't
even afford to drink wine too much.
Yeah, right. Hang around with us. We'll be fine.
Yeah.
I'm trying not to go Monday to Tuesday, Wednesday, right? It's a 0, wine day, except I'm 1 for 3. I'm 1 for 3 good, meaning I did not have wine 1 of 3.
Yeah, right.
Yeah. So it's a bad batting average this time. I'll fix it.
Oh, no. 333 batting average.
Yeah, good. It's good in baseball, not in drinking booze. All right. Good to see you guys. We got to go. Have a great weekend. See you next Thursday on the Traders Workshop.
Happy trading.
Happy trading.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.